By the way,
Yeah.
while we're on the topic, I think news came out on SoftBank's filings that they're actually fully out of SoFi.
Yeah, I wish they bought more FTX. My name's Stephen Fiorillo. I write on Seeking Alpha. I've done 10 or 12 articles on SoFi so far, and I'm in a research group with all the gentlemen on this stream.
Do we have any news this week, Riley?
Yeah, there was a 10-hour SoFi app crash that was pretty big. The SoFi team was transferring some stuff from an old core into the new core. And for a good 10 hours, the app was super buggy and a lot of people couldn't look at their investments. A lot of complaints. SoFi ended up apologizing after the fact that it was all back up.
I mean, it's great that they apologize. It's unfortunately becoming a recurring theme in terms of the negatives to say for SoFi is the performance of their app in general. I know the rationale as to why that is, of them moving onto their cores and we're going to have a completely revamped appearance. But to somebody who is just using the app for the first time or getting referred or doesn't necessarily know, or they're not a viewer of this podcast, they just see a shitty performance and you don't really have too many opportunities to leave a first impression. They won't give it like a second chance unless the value proposition is really good. And so I think that, yes, the SoFi team is working on improving it, but opportunities like these just set them back.
If we look at this a month from now, is anyone going to remember this? Probably not. But it does suck whenever you see tweets and stuff like this of people going like, oh, well, if they're trying to be the brand that's a one-stop shop, it's like, well, maybe we shouldn't put all of our money into this one basket. On the chance that they do, go out for that day, then I'm going to be stuck not being able to trade.
I don't think SoFi is interested in investing in a product that they're going to be getting rid of here in the short term, but just be wasted money on a product that they don't even want because they're trying to move it onto their own core.
I look at SoFi a lot differently probably than other people. I am not a short-term investor. I am looking to hold this 7 to 10 years, if not longer, unless the investment thesis changes. I did a lot of research on what Gen Z's tendencies are. 95% of teens report they have a smartphone or access to one. Gen Zers spend 8 hours per day online. 55% of Gen Z use their smartphone for 5 hours or more per day. 74% of Gen Zers spend their free time online. 85% of Gen Z use social media to learn about new products. 71% of Gen Zers watch more than 3 hours of online videos every day. 80% of Gen Zers aspire to work with cutting edge technology. Gen Z is born between 97 and 2012, placing them between the ages of 10 and 25. So from Business Insider, they wrote an article and they cited a study done by Bank of America. In the article, it said, in a little over a decade, Gen Z will be taking over the economy. Gen Z currently earns $7 trillion across its 2.5 billion person cohort. According to Bank of America research, by 2025, that income will grow to 17 trillion. And by 2030, it will reach $33 trillion, representing 27% of the world's income and surpassing that of millennials the following year. Basically, in a nutshell, I look at it as what are the younger generation more likely to use when they get their first part-time job or they get out of college. And I think the more SoFi enhances the product and enhances the flywheel and the other banks don't catch up, I think there's a very good chance that the younger generation will gravitate to a SoFi or another company like SoFi because they want everything instantaneous.
So how I'm approaching it is sort of from this tech background, and there's a couple of core metrics that you would track in terms of optimizing for tech solutions. And really what you said there hit the trifecta. There's more overall users entering the market in terms of adoption of tech and social media solutions. Not only that, but they also have higher frequency in terms of usage. The usage of a smartphone has gone up in the last 10 years. The third pillar of that trifecta is more engagement with those posts that they're seeing. So not only are they seeing more frequency, but they're seeing actual more engagement. So they're higher intent to purchase. More Gen Zs actually buy products off of influencer marketing. And so if you think of it from that perspective, they're so much more stickier to win a Gen Z versus a Gen X versus a baby boomer versus someone else, because so much more of their worldview is connected through that social media lens. And it has natural synergies with SoFi, right? Because Anthony Noto has talked about several interviews where he says, hey, the strategy is to get them while they're young so that we can get them in the low frequency products And then we can get the mortgages and, you know, the car loans and stuff when they actually have foundational debt in their life. And the last point I'll say on that is on SoFi's marketing team. I mean, we've seen them time and time again. The SoFi Money Moves, that whole movement, they had billions and billions of impressions on TikTok. SoFi Stadium, even this latest thing with regards to the Twitter blue checkmark, that SoFi team knows how to capitalize on all of these movements. And so you have the perfect storm, right? You have this strategy with this company to capture users young. You have more young users entering the market who have a higher likelihood to convert or a higher intent to purchase. And then you have this marketing team that just knows how to drive impressions through viral content.
They are going after the younger generation. They are playing the long game. I'm fine being in a building phase for the next couple of years because I understand their plan. If it was simpler to transition everything over, I mean, look, all of us probably have all of our bills on auto pay and have everything already set up through legacy banking. If it was easier to make that transition, I think more people would.
Direct deposit switch and all these new products that are coming out are just trying to simplify transitioning these people over and making this a really easy product. How easy can we make it for people to get off of legacy banking and go to somewhere that they feel safe? And then secondly is, how much can I make by switching?
SoFi has the wind in its sails because it is the new entrant into a market. The legacy banks, they're the incumbents, right? They are the ones who currently have the pie all carved out. SoFi's ROI on the moves that they make are so much higher relative to their business size because they're just entering this new market and they're going to be stealing from legacy players.
If you want to take a Bank of America, a Wells Fargo, a JP Morgan, for them to actually try to create a solution as effective as SoFi's, they're going to have to up their expenses. To bring an APY of 2.5% or 3% to their clients is going to lower their profit margin. And so for shareholders that already have that sort of, this is how well my company is at bringing effective profits, and these are sort of the margins that they're dealing with. But whenever you go from, like you said, an old incumbent player down to try to compete with the new guys, there's going to be a shift there, and the dividends are going to falter and everything along these lines. So
here in the next 5 years, SoFi is going to start making products on their own single core. They just added a product where I could cancel subscriptions inside the SoFi banking app. So many companies make you go through all these settings. You have to find the cancel subscription button, and then they ask, "Are you sure?" Type delete, "Are you sure?" And then they send you all these emails. Why can't I manage my subscriptions on my banking account? If I just want to turn it off, I should just have that knob on my banking app.
Well, also, Riley, one thing to add on that, on the ease of use and the flexibility, and I'm not sure to what extent SoFi does this, maybe Tannor or Steven, you can, if you know more, but I switched my brokerage account from one company to the other. The company that I was sending my money to, they're like, "Don't worry, just click this button. We'll handle everything. Like, we'll make the request to your old brokerage. We'll take all the funds. We'll do all the transfers. So literally nothing will happen for you." After a week, everything was transferred over. Now that they have fintech lending and they have the technology platform to back it all, a lot of these are probably going to be on Galileo for, the legacy player and SoFi. It would be so easy for them to just do a one-click onboarding to transfer all of your stuff over. Anthony Noto on Tuesday was speaking at Citi's FinTech conference. He dropped a lot of insights. He said that we're already in talks with a lot of the legacy players right now in the context of their technology platform. The thing that he said was, it's not a matter of if these big legacy players are going to transfer over, it's a matter of when they're going to do it.
Expands much further than the legacy traditional banks. You have the regional banks, you have the thrift banks. They're going to need new platforms. And I think that those are a much more likely candidate to switch over to SoFi's new banking platform once everything is built out than a Bank of America or a JP Morgan Chase.
Derek White, the CEO of Galileo, said within the last 6 months that 4 out of the top 10 financial institutions in the United States legally have to move off of their banking core in the next 3 to 5 years. It is a regulatory thing.
Well, yeah, probably because of security reasons.
Yeah, exactly.
one of the things that I thought was really crazy what Noto said, he doesn't think that there's going to be another bank charter that's handed out for the next decade.
Yeah, it was crazy. His rationale was basically it was a headache with OCC and just, the Golden Pacific getting that process done. And also because we're heading into a really tough economic time, he thinks that regulation is going to tighten a little bit. And he said he wouldn't be surprised if another charter isn't issued for another decade.
Wow.
Well, think about how long it took them to get it.
Tell me how much of a moat that is, right? And you could also just say that they're going to acquire other banks that already had it. I wonder if that also falls under what he's saying, because I doubt the idea that there can't be another bank in the next decade that is not going to get approved. That just seems absolutely crazy. So there's like 6,000 different banks in America, and what we're all set, we're all done.
The financial landscape with all these fintechs has completely changed what it means to be a regulatory body in the past 5 years. Like none of this stuff existed 5 years ago. All the buy now, pay later, and all these like fintechs that are, I think a lot of stuff regulatory is going to change. The United States is going to start moving towards open banking.
The other thing that he mentioned in that city group that we can skim or we can chill on that point for a bit, but I found it interesting to see him be skeptical around the student loans. I guess he just fundamentally doesn't trust Biden anymore after being burned so many times, but he was saying that it's still a big if in his mind if they're going to resume in January, even though they've been pushed like 8 times already.
Yeah, he doesn't sound as concrete as what it's written out to be right now. That was a little bit worrisome to me. I heard that as well.
Yeah, I mean, going to start back up. The question's when. At the end of the day, nobody knows what's going to happen except for a couple of people. I'd give it a 50-50. The one thing that we do know is if it gets pushed back, that's billions and billions of tax revenue that's going to get lost. So how long they want to play that game, we'll see.
Noto also justified it by saying, hey, look, we're going to be fine in 2023 regardless. If it gets resumed, then we could expect to be making close to the 2 billion that we were making before, as opposed to the 400 million that it fell to during the moratorium. But if it doesn't, we're still going to be coming close to 1.5 billion, just because in a high rate environment, personal loans will just carry the weight of everything else. The diversity of their product streams is the reason why they will be fine, regardless of what happens to student loans.
I applied everything out since Q1 of 2020. Student loans were over 2 billion. Personal loans eclipsed it in between Q1 and Q2 2022. There's a good chance we're going to hit 3 billion on personal loan originations next quarter. If the moratorium comes back in January, or if it gets pushed off till April, okay, we got 3 more months until it comes back, or even it gets pushed off more. Eventually, it'll all be in sync. Eventually, the Fed is going to pivot. Who knows when? At some point in the middle of this decade, you're going to have these 3 segments firing on all cylinders at the same time.
Let's say the moratorium lifts in the next quarter. Do you think it's going to go back to 2 billion, or do you think it's going to go a lot higher because of all the new members?
So do you see between Q3 and Q4 where it had that uptick from 1 billion to 1.5 billion? A lot of that, I think, was due to the refinancing boom, because in Q4 of 2021, student loans were originally going to resume again in January. The last time it got pushed back 3 days before the new year, it was like an emergency meeting that the administration had. However, if we stay on this track and we don't see any news, we should see a similar uptick in Q4 at least, due to that refinancing boom.
Yeah, I mean, you can practically already see it in Q3, right? Where when there was no end in sight, it was just down, down, down. And then now that we know where the end is, at least now we're flattening out, and we are seeing some new customers come back.
For the individuals who will get student debt forgiveness, the most anybody's going to get is 20 grand, and the majority are going to get 10,000. And the average size of a student loan debt is 70,000. They're still going to have $50,000 to $60,000 that they still are going to need to refinance from a federal loan to a privatized loan. What we saw from Q2 2021 to Q4 is a likelihood at some point we will be back to outpace what we did in Q1 2020.
And I think Noto in the city conference was also mentioning that everybody that they have is basically perfect credit score. So even if they don't really need it, they can just refinance, lower their payments, deal with that inflation, and then refinance again in like 2 years.
And remember, right now, there's no incentive for them to refinance except playing the game of being able to get a better rate, because once they refinance, it's no longer a federalized loan. This is just 2022. Member growth is obviously up. I mean, in just 2 quarters, we've added 900,000 members, and we got football season right now. Q4 is probably going to be a blowout. There's a less than a 1% chance we don't break 5 million members. Product growth is off the chart. The nice thing is that they can deliver products very quick because they own the entire back end. SoFi got notified middle of January that they received the banking charter. Everything was set up to start taking deposits in February. We did 1.15 billion in deposits. In Q2, after the first actual quarter, went up to 2.7. And then after Q3, we're up to over 5 billion.
The reason why these deposits are important is because we can lend money at a cheaper rate than ever.
Yeah, that's the beautiful thing about the banking charter. We can lend directly from the deposits on the balance sheet We no longer have to borrow from high interest places such as the warehouses or other banking institutions, and the spread is just much better. The average member deposit's also growing. We just broke $1,000 per member, and there's members that don't even use it for deposits. They haven't even had a banking charter for a full year yet. The bears have been right with it going down, but they've been right on a lot of things because the economy imploded. The revenue is just on a quarterly basis. It is not on a trailing 12-month basis.
I'm going to make a little prediction right here, just because of where their advertising dollars have been going to. Member growth is going to correlate with football season.
So look, we're going into what was the strongest quarter in 2021 right now. So if they don't beat it, if they just do 500,000, I mean, you're going to be at 5.24 for the close of 2022.
The best quarter that they've ever had in terms of just aggregate numbers was Q4 2021.
Yeah.
And that was the whole refinancing surge, which really helped those numbers a lot. So you can start to piece together how big student loans is to their core business, whether it gets resumed or not, who cares? Like, it's still going to be a part of their core business 5 years, 10 years from now. And it's huge.
And normally, when you would see a jump in members that much, you would expect the revenue per member to get spread out more and it declined, but it's not.
The higher that interest rates go, the more people are going to be incentivized to get a personal loan. So then they can get rid of their credit card debt and these things that are actually charging them 25%, 13% or 12%, whatever it's going to be next quarter. Sounds high, but compare it to what other possible debts these consumers might have. It could be a fleet of safety. Our product can look like the saving grace. And then on our balance sheet, it might be potentially hard and default rates are climbing. But then also, like you shared, Riley, we just sold $440 million of ABS onto the market. So we're also de-risking our own balance sheet. I don't know the back end, what they're looking at, but we're definitely using all the tools that are available to us to make sure that we have a well-balanced balance sheet. We're also taking advantage of the products that are doing really well in the markets that we can offer to. If rates keep climbing, we're going to sell more personal loans.
I mean, credit card interest rates are going up. So what Tannor said makes a lot of sense. If people have a lot of debt at a high interest rate and they're able to qualify for a personal loan, credit card rates for a lot of people are over 20% now. And you can go get a personal loan and take that money and pay it off. You're generating a spread right there and saving money. I think personal loans is going to go up. The Fed's not going to get dovish anytime soon. I don't think they're going to get dovish and cut rates. That's not how Jay Powell sounded at the last meeting.
Yeah, no, you have a 50 basis point hike in December coming, absolutely. And then it's like we reassess what we want to do in 2023. And probably even still for the first two Fed meetings of 23, you're going to get like 50 basis points, probably. We'll see. There's this whole concept of like a double peak in CPI numbers, which means that it could get a lot worse before it gets better if CPI starts ticking up again. But anyways, that's macro. I wanted to ask you, Stephen, because we've all sort of answered this question in previous episodes, and it seems as though a lot of the market is looking towards profitability as that trigger to turn around the momentum in SoFi stock. When do you have it pegged for that profitability number? Just curiosity.
Yeah.
So we need to see what the 2023 guidance is before we can really come up with any type of accurate formula for any type of projection going forward. If I'm going to make a wild speculation, I'm going to say 2024. If you want to get a prediction sometime in 2024, I'm not going to.
I want a quarter. I want the exact quarter.
I'm not saying gangbusters sometime in 2023, Q3, it's going to happen.
I think whenever stocks go down, people are wondering, what am I missing? What am I not seeing here? You know, why is this going down? What's the bear case for SoFi?
So let's be very clear about a couple of things. Apple generated $99.8 billion of net income. They generated $111 billion of free cash flow.
25% down?
Stock went down 12% in 5 days after Q4. I mean, if Apple's going to go down, generating those types of numbers, and you have Amazon down 50% for the year and Google down, these are massive companies. All of those stocks are going down. You can't expect stocks like SoFi to go in this type of environment. It's just not going to happen. Everything had a revaluation period.
Say that if I was trying to be neutral, then the moratorium is probably the biggest company-specific bear case that's not related to the macro.
If you want to make a real bear case, consolidation in the industry and people trying to outdo SoFi at their own game. I mean, think about it. Why wouldn't a company like PayPal want to start acquiring companies and consolidate and then really go after this industry? Or even as the Wells Fargo hasn't tried to buy out SoFi.
That would be the only logical way that I could see them going about it, is through an acquisition, because SoFi comes equipped with that bank charter already.
Exactly.
I don't know how Noto feels about selling, given all he doesn't
want to.
I don't even really believe it's completely up to him, though.
It's a board decision.
It's a board decision.
Yeah, and we saw it with Twitter, right? Even then, like even if they don't want to sell, they have a fiduciary duty to make the right decision based on whether they think that they can hit it within a reasonable time frame or anything along these lines. Like they have to sort of weigh it as a financial decision rather than an emotional one. I think some people write in the chat, even in this one, saying like, oh, but they're going to get acquired, as if that's a bear case. You know, that's a bullish case. Like
Yeah.
they're going to buy it for more than what you're paying for it. Like
I disagree. That's bearish for me. Does anybody really think they're going to be at $4.14 billion in 2030?
they're not going to be acquired for $4 billion. They're going to be acquired for 10, $12 billion, $15 billion.
As far as SoFi's market cap, they have a tremendous runway of growth. And if they can pull off what they're looking to pull off, somebody offered them $15 billion and we got something to vote our shares, I would vote no. It's not worth the short-term gain versus what I believe the prospects could be. I'm willing to hold this for 10 years.
And the number you just talked, like 50 million, that's basically like almost a 4x. That's almost like a $20 share price is what you're saying no to.
You know, some people would love it because they're short-term investors, and that's fine.
Yeah.
As a long-term investor, I'm buying this going to zero or it's going to be a big winner. There's no in between.
Yeah, there's definitely some people in the chat right now who are like, okay, it's at 5. I would cash out at 15, take an easy 3x, lock that gain.
No way.
Sure, do that.
And that's sure, but you're gonna miss out on a big
Sell them to me.
But,
yeah.
but that's what I mean, though. I don't. So first off, I want to clarify, just because, like, if that is the bear case, that's a significant bear. Like, that's a significant
great bear
upside.
case.
Yeah.
It's a great bear case.
Right, exactly. So that's what I'm meaning is, like, even our downsides are not that big a downsides.
We should talk about the B2B aspect with Galileo, because that's something that nobody except for the people in this group really talk about. There are so many companies that are still in the Stone Age and cut checks. It's not just on the consumer side. There's huge corporate initiatives that are going to transfer to the cloud and to the new age of doing business and not using checks and snail mail to get payments to their vendors.
There's so many different ways SoFi could grow in the near future. 2/3 of the world's checks are written and received in America. So
go a step further on what you just said. Wait till SoFi gets into the realm of corporate banking.
Anthony Noto was saying, we get requests every day from SMBs, from small merchant businesses, so that they can essentially do all of their banking with SoFi, so that the business can have a checking account, a saving account, a treasury account with SoFi powered by Galileo. So instead of that consumer, you can have an actual business banking on SoFi. The entire ecosystem is supportive of this. Basically, Anthony Noto's stance in that city conference. I also did a video feature Anthony Noto talking about them. Basically, Anthony Noto was saying, hey, look, treat consumers like normal people, like a dry run for regulators, so that later on down the line, when we unlock small merchant businesses, which everybody is asking for, we can approach regulators and say, look how much trust we've built with consumers. This is what we want to do with SMBs. And it's game over.
Think about how many businesses have never heard of SoFi. In the next couple of years, when you get the brand recognition out there and SoFi goes mainstream, the amount of business institutions that they could possibly pick up, sky is the limit. It's SoFi's game to lose at this point. So what product would the three of you like to see in the next year?
SoFi paying for. I know everybody hates it, but I really, really think that, I mean, have you seen the adoption levels of Gen Z and buy now, pay later? It's going to change the way that we lend. It's instantaneous, especially in the next 5 years after Visa and MasterCard build the entire rails and they just unleash it onto the markets. People will start using it all over.
I think it's some social component. SoFi Hong Kong with that social app, the whole public.com or StockTwits, they have that young demographic. They have them in the app. They have them making the decisions. We already know, going full circle, Stephen, to the stats that you're bringing up, that engagement is that missing piece in app of that demographic. And I think that social component, especially considering Noto's background in Twitter, is really, really going to be sticky considering that demographic. And they're already sort of secular growth trends in terms of how they use social media.
If I were to say one specific thing, but I just want them to sort of improve the AWS of fintech to a point where we can actually host money and be the bank sponsor for the clients that we're actually taking on. That way we can offer one solid work with us and work with us only. We do the core infrastructure, the processing, and then the actual bank sponsorship. But right now it doesn't seem like we're doing that part. And that's just a missing key that kind of makes me sad every time that I see a partnership that's not us.
So mine is a hybrid. Mine is Tevis's with a real investment platform. And when I say a real investment platform, I'm talking about an E-Trade Pro, a Thinkorswim platform, because you have options coming out soon. Options have the potential to be the bread and butter for the revenue generator on the investing because there's a fee per contract right now.
I don't think we're going to charge it, by the way. I think if we're going to be best in breed, there can't be someone that's better than us. So if Robinhood and Webull and all these guys are charging free options trading, it's not free. They make money, but they make money only through payment for order flow.
What I think will happen is if it is free, it would be a SoFi Plus benefit, I think.
Like, and even if it's not just a secondary platform like Thinkorswim or E-Trade Pro, you need a real heavy-duty online investing platform. People tend to put more money in their brokerage accounts than what they have in their deposits in their checking. You also want social media aspect to be able to build that engagement. You need to have a platform where people are going to stay on there for research. It's about keeping everybody in one place. That's why these other platforms have long-term customers, because their research is on point, their watch lists are on point, and everything is right there. They never have to go to another platform to get information. And they do have a social aspect on their app right now. If they can make a web-based product that can challenge these other companies and incorporate the social aspect, they'll have a winner on their hands. They really will.
I mean, SoFi Hong Kong basically has everything built out. They would just need to expand that out into the core product offering.
I think that's the beta test there, because like it's free to make that business over there in Hong Kong without any tax and stuff and lacks of regulation.
I look at it maybe too analytically, where I go, where's the dollars?
So
I guess if that's the product that people are looking for.
Cross-selling products and getting more people onto the platform. Not everybody that invests is going to use the checking. Not everybody that uses the checking is going to use the investing. But some people use both. And if people come over for one thing, they may use the other. It's about getting people in the door, and people could be waiting on the sidelines until SoFi has more products that appeal to them. And then the more members you get in the door, the more chances you have for them to use the loans or use something else that we generate revenue from.
I've mentioned this point before where SoFi has currently products that are loss leaders. In other words, they lose money on that product offering to get a user into that ecosystem. But really, my whole end game from a consumer perspective, not from the B2B side, Galileo, but from a consumer perspective, SoFi Plus has the potential to really be that adhesive or that sticky connective tissue between every single other stream, because they can offer any perk that they want. They experimented with this whole Twitter Blue thing. They can offer perks on the social platform. They can offer perks on the lending platform in terms of the APY. They can offer perks on the fintech platform. If they have like some type of brokerage form or options trading as well, they can offer perks on that as well. SoFi Plus is really the hub that connects all of SoFi's other like lending segment products and financial services products. And so we should see that average revenue per member eventually start to tick up and up and up because of the cross-selling. Now that SoFi Plus is like fully enabled and gets more and more advanced.
Super big fan of SoFi Plus. And a lot of people right now are going, okay, what's the difference? But really the difference is the marketing. Being able to say that you're part of this club, all the new beta tested products are all going to go to SoFi Plus first. Pay in 4. That is a SoFi Plus exclusive product. And that's the great thing, right? Is that the entry price to get into SoFi Plus is essentially free. If you want to take that time out to gain access to these new products and future products to come, like Twitter Blue verification, that is really where the long-term sticky client and a lot of the money actually comes to. Like, that's what people get so confused. Whenever we look at average revenue per member on a quarterly basis versus how much we actually pay for cost of acquisition, okay, which is much, much higher than the actual average revenue, but it's because they're with us for potentially years. Old legacy banks have clients for 20 plus years, but yet they only paid for them once.
Y'all are making me want to empty my wallet again on SoFi.
Yeah, honestly, this episode has made me really bullish.
It's either you think SoFi is going to go away or you think it's going to succeed. I don't think there's a middle ground at this point. I don't think the OCC is going to approve a bank charter for a company that's going under in a month. The scrutiny that they went through to get the banking charter. The OCC is not just handing banking charters out, as you guys said.
If you are looking at it the way that Steven is trying to look at this stock and you're wanting to buy for the long term, is the price going down even that bad? If it would have just stayed at $15 this entire time, you'd have a lot less shares right now. Use this as a way, if you are bullish, if you're doing the right due diligence and everything like this. I'm not saying go buy this stock. This is just for me. But the way I'm looking at it, I cannot find a lot of selling points in my opinion. Steven, thank you so much for being on. I appreciate it. Hopefully we'll be able to, speak with you again.
Thanks, Stephen. I appreciate you coming on.
Thanks, everybody.
Okay.
Thanks, Stephen.